Good afternoon. From the hundred of sessions that you all have an opportunity to participate, we appreciate you all taking the chance to join us on this Private Finance Capacity Building Day and to hear the outcome of a case study and our plans for scaling. My name is Rakesh Wazirani and I have the pleasure and the privilege of moderating. Known as Rakesh. On other occasions, I'm known as father of Kiara and Nitara, and sometimes husband of Rashita. Yeah? So let's set the context as to having a question why it was selected by CPI and 1.5. But I think useful for our panelists and speakers here, three of them here, Jayan joining online, is to also get an idea from who is participating. So if you are comfortable to scan that QR code, it has a couple of questions. If you are representing a please scan that code so we can know who is in the room. One of the other questions which is in session, you are in this room, what is on your mind? What do you think we should talk about? What do you want to accomplish? Again, so that our panelists and speakers can reflect on it. But now let's also look at the context. We are here, of course, in the MENA region. This is the report from UNFCCC with regards to capacity building needs for the SMEs in the MENA region. While it's a global conference, let's look at what this report is talking about. This report is talking about the kind of SMEs which are active in the region, and you see an vast majority of them are in the textile, leather sector down there. So let's take that and move ahead. And what do they want? Where are the gaps? What do they expect? Well, they expect technical capacity support. They expect knowledge on financial opportunities. They also expect data and how they should report, how it makes sense for their business context. Now, help us out, please. If you could put your hand up only if you are happy with what you are wearing. If you are happy with what you are wearing today, yes, that's what this industry does. The fashion industry allows us to express and allows us to feel happy and put out what we are feeling and thinking. At the same time, it's a source of employment for millions, especially in the global south. It's also a contributor to the overall economy. Yeah? But while we look at those aspects, what is the fashion industry? What's the supply chain? Well, it's a supply web, something like this. Multiple players, multiple entities, and the mishmash in there. At the same time, it's also global. We would have seen pictures of raw material coming from one continent, being processed in another one, and then final product in a third place. Yeah? But since some of you are from finance, definitely here, we also have to talk numbers. So let's look at numbers in terms of impact, in terms of the amount of water use, in terms of the amount of energy use, in terms of contribution to pollution, in terms of contribution to overall use of energy and hence emission. Well, those are numbers. Those are some big numbers, yeah? At the same time, well, we talk about the triple planetary crisis. So whatever happens in terms of energy use and emissions and the amount of water being used and it being polluted, it has an impact on biodiversity, which again has an impact on climate and how all of this is linked together. This is not an eye test, but what you see here, one row is for one large organization in the fashion sector which has committed to the Science-Based Target Initiative, along with their targets for Scope 1, Scope 2, Scope 3, the years and so on, and then some additional aspects linked to it. But when these big companies come up with those targets, well, it has to go into the supply chain, and the suppliers and the SMEs, as we saw from the UNFCCC report, they need support on capacity building. Well, here, the Sustainable Industrial Areas Toolbox, completely free, has information for the SME sector, tools for the SME sector that they can deploy to have knowledge on how to go about addressing many of those hotspots. Completely free, funded by the German Development Cooperation Agency. And then you would say, yeah, but technology. You know, we also need technology for this transition. And it costs money and we need to have an ROI. Yeah. What you see there is the Green Technology Selector by the European Bank for Redevelopment, whereby you can see this particular company had the particular situation where they purchased those dyeing machines. That was the investment, that was the financial result, energy savings, carbon savings, and the overall impact available, a few clicks. So then we say, yeah, but money. Okay, knowledge is there, technology is there. What about the investment? What about the money? Yeah, research has been completed about feasibility for green credit line, green finance. Here an example by WWF for Pakistan and for Vietnam. And then you say, yeah, but it's much bigger. We have to quantify the bigger problem. What's a $1 trillion opportunity? That too has been looked at. Okay, so what's left? But you know, banks will not go to these big players. They will go to one of their neighborhood banks. DBS, for example, in the ASEAN region, they have a taxonomy for transition finance. They also have a focus on apparel and textile. Here, from last week, this partnership with H&M Group, Standard Chartered also has a partnership to support on sustainability aspects for the supply chain. And you also have one with PVH, the parent company of Tommy Hilfiger. And then you'd say, yeah, okay, but you know, when money goes in, we need to take care of accounting principles. We need to know how to record it, and we have to report on disclosure and impact. Yes, yes, absolutely. The framework exists. From the 1,182 data points of ESRS, which came out, there are several data points which address and impact the supply chain related topics, quantifiable data points. And then we would say, okay, but overall disclosure, yeah, that also is in place. Requirements for the sector are in place, yeah. And then you would say, yeah, but that's not where it ends. It's not just CAPEX, yeah, we need OPEX and trade finance. Yes, for trade finance, for this sector, which is global, which employs millions, which is on every country in the global south. There is already processes in place, proof of concepts in place. We'll hear about another proof of concept on impact finance. But then as we heard earlier during COP, okay, enough with proof of concept. Now we need proof of implementation. We need proof of scale. And where are those challenges? What are those bottlenecks? And how big is the money going to the global south? CPI, which is one of the hosts for today's event. This is, again, not an eye test, but this shows the flow of capital. The flow of capital in the Sankey diagram. And here you see for industry, 9 billion right there on top. Okay? And then the other one from the development finance organizations. And here you see there's also focus on wastewater treatment and its links to biodiversity consumption, which are all hotspot for this SME sector in MENA, but also in the wider global south. But who are we talking about? Well, at the end, we're talking about these factories which employ many people. So these could be Ayatollah in the African continent. It could be Ramaswamy in India, where I am from. It could be Samiha's factory. It could be Amal's factory. It could be Chew's factory. All SMEs, between 50 to 800 employees. And these are the same SMEs which are in the countries you see all in red. Water risk, climate risk. Climate Action Tracker shows the red colors for those countries because they have not done enough. At the same time, we look at the situation here. So that's the situation overall in vulnerability, Global South. Water risk, Global South. This one is the action tracker, they are not doing enough. This one is about the FX risk. And finally, this is the inflation forecast. Now with that as the situation and scene setting, this is what SMEs say. SMEs say that in order to take action, what they are already doing is reducing energy consumption. Let's hear a little later on that. And they say that to take greater action, they need financial support and tools for measuring and monitoring emissions. So let's talk about one such industry group within the fashion sector. If you could please help us once again. Who of you own a pair of jeans, at least one pair of jeans? Okay, chances are that they are made by Saqib, your factory, because you make 1 out of 12, isn't it?
Yeah, we make a lot.
So
we can't consider ourselves an SMEs, but yeah, if you own 5 pairs of jeans, at least one should be from our factory.
Yeah, So then, Saqib, if you can share your perspective, what kind of capacity building support are you looking for? What have you tried out in terms of sustainable finance? What are those aspects that need to be tweaked a little bit more, which perhaps the audience here could support with, yeah?
Thank you so much, Rakesh. And thank you everyone for inviting me to this panel. And as I said earlier, Artistic Mineral is one of the top producers of denim and garments in the world. Our capacities are around 4 million garments per month and 10 million meters of fabric per month. That doesn't mean that we forget our collective responsibility of our peers in the industries who are smaller than us and they require more help. Just to give you a context of, what we have done already in terms of decarbonization. We have already invested $100 million in terms of in the areas of energy, in wind power. 15% of our energy is coming from solar panels. We are mitigating more than 16,000 tons of carbon dioxide per year, and our ambition is to be net zero by 2040. And when I say we have an ambition, the number that you see, it's diluted by a lot. We need at least 10 times the amount of money to get to net zero by 2040. So this is what we'll be discussing in this panel. How do we get there? And we have looked at many forms of financing. One is that we invest our own money. There is also co-financing models, and there is also debt. And I think I speak for all the suppliers that no one wants to touch debt, because that is such a vicious cycle where we are stuck for a long period of time with no returns, especially when you look at projects of decarbonization with long-term ROIs or in some projects that are negligible ROIs. And one of these examples of co-financing, which we really like, we work together with the German bank, development bank, DAG and KfW. They invested €500,000 in our farming project, in which we are growing sustainable and organic cotton. And why would you think, a company like Artistic Mineral, why do we need to go back to the farms? We should be very happy sitting in a city, producing denim and fabric and garments every day, and not worry about our upstream supply chain. But we have realized that, we cannot work in silos anymore, not in terms of only the same industry level, but also upstream. We need to go back, educate our upstream supply chain, because they cannot decarbonize by themselves. They are really SMEs. The farmers that we are talking about are small landowners with less than 10 acres of land, 15 acres of land, something like that, which is like unheard of. You go to the Western farmers with a small landowner around like 5,000 acres or 10,000 acres. So this kind of grants, this kind of financing goes a long way in educating the farmers and also helping in decarbonization. One of the main, if you can see the points, I don't want to read the slides, but the money is going towards smart farming, towards innovation, in helping measuring the carbon in the soil, the emissions from the farming, and how to reduce that. So a lot of that is involved in that. So I'm really happy to share this story over here, Rakesh, and further we'll talk about what kind of financing needs do the suppliers need.
Thank you. Thank you for that, Saqib. You have tried out many of these options for financing. You have experienced some of the things that work. You have experienced some of the things that need to be tweaked. Now, let's hear from Mr. Jayant Kashyap, who's going to join us virtually. So if the technical staff could help get Jayant on screen. Jayant, can you hear us? Mr. Jayant Kashyap is with Good Fashion Fund. They are an impact investment fund, and they have tried out a proof of concept for multiple factories. Jayant, are you ready?
Yes, hopefully you can hear me as well.
All right, super. Then Jayant, if you could briefly introduce the Good Fashion Fund as to why it came into existence, what have you experienced, as an opening.
Thanks, Rakesh. I think, first of all, good afternoon to everyone. I think very happy to be here, although virtually. My name is Jayant Kashyap Balasubramanian, the investment lead for the Good Fashion Fund. I do have lots to talk about the GFF, but we have a 90-second video, which might make it a bit interesting and probably helps you maybe withdraw a bit of the conference fatigue that you've been going through. So if you'd allow me, I'll quickly share my screen. If I can request the organizers to provide sharing rights.
All right. Jayant, you'll be able to share the video in a moment, yeah? But if you can tell us where you are currently today and why are you there? Jayant. Right, we are ready for your video. All right, Jayant, while the technical staff supports us with the video, do you want to briefly talk based on the information on the slides? Okay. We wait for him to come back. It's again about the fashion industry. The name of the fund that we see is the Good Fashion Fund. And as soon as just click on, there we go. Jayant, if you're there, then please just start speaking, yeah?
Sure.
Okay.
Hopefully I'm still audible.
Yeah. We can see the slides. We are on slide 2, which shows your investors and fund managers and so on.
Sure. If I could request you to go back a previous slide, if that's possible.
Yeah.
Yeah, and you can play that.
Okay.
Second slide, and then you can just hit enter.
Okay, Jayant?
If you could just maybe play the video, that might be helpful.
Yeah, I'm not sure. I'm not sure if that will work out, Jayant, yeah? So let's go through the slides.
No worries.
Okay.
That's fine. That's fine. I mean, just to maybe quickly talk about the Good Fashion Fund, we're a $19 million demonstration fund. Right now, globally, we're the only impact fund focused on the textile and apparel space. We have one mission. We want to essentially showcase that there is a business and impact case by investing directly in manufacturers who are operating in the global south. How do we do that? We essentially provide debt. I heard Saqib about staying away from debt, but I do have a different opinion. What we essentially provide is CapEx finance. So for manufacturers who are working with brands and who have a sustainability roadmap or an agenda, I think the next push is obviously to move towards more sustainable production technologies. We come in as an investor partner in that journey, providing $1 million to $2.5 million per investee for over 5 years with a clear adopt. Then, Lotus Foundation.
Yes, Jayant, we are on the next slide and we can see.
Perfect. What you'll be seeing is that we're at the center of 3 key stakeholders, manufacturers, technology providers, and the brands. The genesis essentially is to showcase that through impact investment, we can provide long-term finance to manufacturers, which should hopefully drive the adoption of the technology in countries like India, Bangladesh, and Vietnam. For the brands, especially who are still early on and considering if they should come in and transform the supply chain, we also see this as improving their own supply chain at no cost to them, with the outcome that it would lead to fairer, ethical, and more responsible supply chains, and also provide, let's say, economies of scale in terms of reduced costs by adopting these technologies, increased revenues, and if there's an offtake involved, also de-risking the cost of investment for these suppliers as well. On the technology side, there are a lot of technologies that have been in the market, but still quite slow to adopt. For instance, let's say on the spinning side, there are a lot of technologies that are out there, but you see, especially down in India, down south, many factories still operate on legacy machinery. So we do tackle those low-hanging kind of wins and then move upwards in terms of cutting-edge innovations. That's what we seek to do. And if you can move a little ahead, one more slide.
Yeah. Jayant, we are seeing the process steps for
Perfect. So lastly, I think if I can conclude, we essentially invest across the production value chain. We can do all the way from spinning, knitting, weaving, in terms of the wet processing steps, in terms of dyeing, washing, printing. We also support the adoption of, let's say, renewable energy in terms of rooftop solar. We've invested in ETPs that are more up to date. And besides that, we have a strong focus on textile to textile recycling as well. But these are technologies that should be widespread, is what we believe. So through the fund, we hope to essentially showcase that it is feasible, financially feasible to invest, and at the same time gain subsequent impact savings through these investments also. Currently, we have 4 investments done, 2 in India, 2 in Bangladesh, and we've invested across tier 1, 2, and 3 factories. That's in a very short summary about the GFF. Back to you, Rakesh.
Right. And Jayant, if you can also share, how many visits have you made now to the investees in Bangladesh and India?
I think we make it a point to visit at least twice a year. Right now, because let's say we have 1 more year before we close the fund, we have space for 2 to 3 more transactions. So you'll probably see us in country at least once a quarter. We also try to be, let's say, responsible about our own travel. But because the factories are based here, we do need that face time. But at least twice a year is what I would say.
Okay. Thank you, Jayant. Carl, we've heard what the big brands want. We've heard what the SME wants. We've seen these small-scale proof of concept. But companies go to their neighborhood bank, like yours, as Standard Chartered. How do you see activity? What is the vision of Standard Chartered to support SMEs with their transition?
Thank you, Rakesh. Firstly, this is a completely new area for me, and I'm finding it absolutely fascinating. But I must begin by acknowledging my colleagues from the Multinational Companies Business Group, led by Rami, sitting over here, who actually, even though they represent large companies, but it occurs to me that you deal with issues that very much aligned with what we're listening here. And clearly, I think there's a continuity between large businesses and SMEs, and indeed the global financial system, of which Standard Chartered is, sort of quite a significant player. The focus of Standard Chartered over the past sort of half decade or maybe the past decade, in fact. When I first started 7 years ago, I was head of sustainability. And a very significant focus of what I did pretty much was marginal to the bank. Maybe it was like corporate social responsibility that came under that brand, came under that title. And yet, in the space of half a decade, sustainability went from being a relatively niche sort of aspect of what the bank does to being absolutely core. So core that we've in fact committed to net zero from all our financing, so all our activities, by 2050. Now, when you consider that we are, in fact, an emerging markets bank where very significant industries are themselves significant emitters, which we finance, this is quite a big commitment. And yet we're committed because, to a very large extent, we believe that in order for us to overcome the climate change emergency, it will require a global root and branch operation, basically, which involves every aspect of society, including the corporate sector, which we represent. So in this regard, we support SMEs, but we support them indirectly in that we create the enabling environment in order to enable emerging countries, and this includes countries like Pakistan, Bangladesh, India, Nigeria, Egypt, Kenya, South Africa, a lot of these emerging countries, to be able to, in fact, be part of the global financial system. Because without large institutions like Standard Chartered and other banks as well, it's very difficult for them to be part of the global financial system, which means that they can potentially be excluded from financing. Now, having said all this, when we speak about sustainability and we speak about transition, the optimal word is a just transition. So a transition on just terms. We cannot pretend that countries like India or Bangladesh or Egypt or Kenya or Nigeria can transition their economies in the same way that Germany, the Netherlands, Canada, Australia, the United States, and other advanced economies can. So therefore, sustainable finance is to a very large extent an instrument that enables the effective transition of societies, including their industries, from settings which may currently be environmentally difficult, so to speak, and may emit excessive amounts of CO2, for example, to a globally sustainable standard in line with the principles as enunciated by the various standard-setting organizations, including yours, TVV Rhineland, and that's very, very important. And to do this, financing plays a central role. And to this extent, Standard Chartered has made a commitment between now and 2030, which is not very long from now, to catalyze $300 billion in sustainable finance. And not only do we want to catalyze it, but we want to catalyze it where it's needed most, which is emerging economies, because the biggest challenge that many emerging economies have is lack of access to sustainable finance. Now, the reality, of course, is that Standard Chartered can't go it alone. Standard Chartered is a significant player, but it's one of many, many players. And this is where I think the NGO sector, obviously sovereigns, government, private sector, and multinational development organizations, development finance institutions need to coalesce to create the environment whereby investing in sustainable initiatives is no longer seen as a risk, but seen as absolutely essential and indeed core for the survival of this planet, and indeed transitioning to net zero in due course by net 50. So overall, banks like us, and we're not the only one, but we play an enabling role in emerging societies in order for them to be able to access the global financial system, where otherwise SMEs and others would not be able to access. So we enable other institutions to do so.
Okay. Thank you, Carl. Helen, you've been patiently listening. We started off with the finer aspects of fashion. They will talk about the finish, they will talk about the effects on the garment, they will talk about the quality aspects in terms of full traceability, organic, and so on. And now these SMEs, in addition to talking in general terms of loan, they have to talk also in terms of these SMEs. In addition to talking in general terms of loan, they have to talk also in terms of percentage recycling. The big, as per ESRS, they have to disclose, as per IFRS, they have to disclose after, based on other things. Many of those companies are keeping numbers based on accountancy principles. Your organization is kind of expanding that envelope of the core accounting aspects with aspects linked to sustainability. And all those SMEs need capacity building. How is ACCA? How do you look at it?
Thank you, first of all, for the invitation to be on the panel. It's been absolutely fascinating, and I think we're telling a story here, hopefully a holistic story of the kind of capacity that needs to be built. And I think whatever the sector, whatever the profession, capacity needs to be built to meet the goals that we've all talked about and the challenges that we've all talked about for several days now here at COP28 and previously. For accountants, it matters, what can we bring to the party, I guess? What can the profession bring to the party? Well, ACCA itself has 250,000 roughly fully qualified members globally. We have over 500,000 students studying towards the qualification, but we're part of a much wider profession of around 3 million professional accountants. So for me, the word of the week has been mobilization. If you mobilize that capacity to serve the outcomes that business needs to drive to sustain the planet, then I think we're in a very good place. So what can the profession bring? It has to bring its core ethical compass, which has always been part of the training of professional accountants, and so much needed within the business and assuring what comes out of those businesses in the audit profession. We have that dedication to the public interest, which as an organisation, yes, I have to do the very best for my members, but I'm mandated to act in the public interest. And I think that's, if sustainability isn't part of that, then I don't know what is. So that public interest lens brought into the business, extremely important. And then, of course, specific skills and expertise that professional accountants can bring. So you talked about data. There's always been, the professional accountants has dealt with financial information according to international financial reporting standards for decades now. There is that commonality of language, comparability, consistency that allows investment, that allows stakeholders to fully understand what is going on in the business, and ultimately allows it to be assured. I think that accountability piece is so key here. There's so much data flying around, there's so much information, but the consistent presentation of that by businesses can give ultimately the public so much more confidence in what is being produced. And I think that we see this as a moral question, obviously one, an ethical one, that goes without saying, but it's a business question as well, because it's about risk. If businesses don't produce this information in a consistent fashion, if they don't drive their business strategy using that data in the way that professional accountants' lens can produce, then investors aren't going to back them, consumers aren't going to buy from them, people won't want to work for them. So, you know, these are really compelling reasons for businesses to be looking at sustainability. And then, so that comes to impact investing, because if investors want to invest with impact, then they have to have the information presented that allows them to do so. So accountants have to play a very key role there. And then I'll come back to the global nature of the challenges that face us. I think international organisations or international professions that have those frameworks have to play a key role here. Yes, there are very specific circumstances in regions of the world, countries of the world. However, it's all it's all connected. We either all win or we all lose in this scenario. And in promoting that just transition, private business has to be able to recalibrate their business model and have the information and the description of that work, and to be able to describe performance in a much broader way than it has done previously. So, you know, we're talking about natural capital, we're talking about human capital and financial capital. How does that integrate? How can you describe that performance to the marketplace and ensure the sustainability of your business and of the planet? I know we're going to go into more detail on this, but you know, transparency, accountability and trust are key, and we have to build capacity there within organisations and those who advise organisations to be able to achieve that.
I have a short follow-up. While we were preparing for this session, I asked Saqib, well, we'll have one contributor from ACCA. Have you come across ACCA before? And he said, oh, ACCAs are everywhere in Pakistan. So I'm curious, Helen, are you already getting demands from your members?
Yes,
there?
yes. I mean, you know, one of the things we did just this week here in the UAE, we have a certificate in sustainable finance, which is available to our members globally, has huge uptake, but we translated it this week into Arabic. It's going to be available in simplified Mandarin and Spanish. And we very much see that upskilling piece. You know, if we're talking about capacity, if you, those 3 million professional accountants out there, not all CCA, all ACCA, thank goodness, because I'm not sure I can manage that. But the 3 million who are out there, if they are all upskilled in the right way to support businesses, then we can have a huge impact.
We are at the capacity building day, of course. You are here since you have some ideas. You are here since you have some experiences. You are here because you have some criticism. At any stage when you feel you want to contribute, please put your hand up and we'll share a mic with you. You could also type in your question via the QR code if you wish. I want to start off before we talk a little further. We asked via the QR code the audience to share what are the words on their minds. And this is what came up, Sustainability, of course, ethical, you touched upon it, capacity, finance, circular, political risk came up, effective climate finance came up, underwriting standards. But since many of us have gone through Stephen Covey's 7 Habits of Effective People, let's talk about first things first. Let's talk about our sphere of control and influence, Saqib, when a brand, many of those brands I hear, they have made big commitments, and they would always say 11 times our emissions are in the supply chain. They come to you for their decarbonization plans. Okay, let's roll up this sleeves. Let's be candid. What is expected from you? And what do you expect in terms of finance related to decarbonization then?
All right. So I don't see any brands here, so it's good. We can talk freely. But it's live streamed, so it's recorded anyways. So basically, Rakesh, just to give you a context a little bit, when Jayant was also saying that, he doesn't agree with me, and we all have right to, disagree with each other. But the thing is, we have to get the context of the suppliers. What kind of financing do we need, right? As a big supplier, as a small supplier, geographical location is different, everything is different. But also in terms of the ROI of the project, right? We cannot think of decarbonization as a CSR project anymore. It has to make business sense for all of us. If it doesn't make business sense, then it will not be sustainable, right? So for projects which have low short-term ROIs, that can be a viable option, right? 3 years, 4 years, 5 years. But there are projects over there, Rakesh, with 20 years, 25 years, or 30-year paybacks, or sometimes no payback at all. Why would a company like mine, or forget, we are a big organization. What about a small organization who doesn't make $50 million a year? How will they support that debt to decarbonize themselves? It's not feasible for them, right? So when we think of this, we have to think of the type of financing which is available. Is it available, first of all? Is it accessible to everyone? And is it really affordable? And since the last 1 year, we have a small group of manufacturers, and we started to think about this, that all of us in different locations, we face different problems. So we are now writing a white paper on that. With us, we have Mass Holdings, we have Epic, we have Pectic, we have Nitex, and supported by GIZ Fabric, in which we're striving to understand and map the landscape of financing. Like what's available in which region, what is good for me might not be good for someone in Sri Lanka, and might be good for someone in Bangladesh. So we are trying to map something like that. Hopefully that study will be published in March. That will give us and others more clarity on that as well. Now coming back to the brand part, right? And when you talk about accounting and all, and this is what we discussed earlier as well, it's amazing that even now that we discuss all the decarbonization efforts separately from the sourcing decisions, right? It's believed, and it's like an unwritten rule, that the supplier has to do this anyways, regardless of if he's going to get, they're going to get business or not. And that doesn't make financial sense for us, right? When we are sitting with the sustainability teams, we align very well. We are all aligned, same frequency. They want decarbonization, we want decarbonization. They want zero liquid discharge, we want that as well. But when we go to the sourcing team, they're like, yeah, we want all of that in the product, but that's not connected, right? It's not connected to the financing the same way. Who's going to pay for all that, right? Nobody raises their hand at that table. So accounting of the decarbonization and product cost has to be on the same page. It has to be, when we say capacity building needs to be done over there as well, so that people understand that this is not a small order, it's a tall order.
Yeah. And Saqib, if you can also add on a particular aspect. We talk about money, but the banks would say, this is not our money, this is your money. It's the depositor's money that we are giving to you. So we have to do thorough due diligence. Impact funds would say, well, we are capitalized by those investors. It's their money. We have to do that due diligence on social and environmental aspect. How many due diligence audits does your firm go through, and what is the overlap of the items in those audits, approximately?
It's a lovely question, Rakesh. And I think monthly we pay around $35,000 to have TUV, Control Union, SGS, Intertech, everyone come into our factories and do the same due diligence again. So even with all the decarbonization efforts, somebody has to come and verify it. That is the wind power really there or not? Is the solar panel really there or not? How is it efficient or not? And that what it does is that the risk of failure is all with the suppliers at the moment. If I fail the audit, all my investment is gone, even if it's for a technical point. And that's why we try to work with different certification bodies as well. How can you unite, or how can you simplify all this for us so that we don't have to spend time? And in that $30,000, I'm not talking about the manpower I need to keep everyone happy. Every day some auditor is coming, Our compliance teams are like, they're never going home.
Yeah.
Their families are unhappy, really unhappy.
Yeah.
But
We're going to listen deeply to each other. We are going to debate compassionately, and we are going to be honest and candid. Let's continue with that. Yeah, Jayant. We If you could share, based on the proof of concept that you've had, what are some of those learnings that you have extracted, and what are the tweaks that you're planning? Jayant, are you able to hear us? Okay, while we get Jayant back here, let's continue a little further. Okay, Jayant, did you hear the question?
Yes, I did, and hopefully you can hear me now.
All right.
Yes, I did, and hopefully you can hear me now.
All right. We are amplifying and echoing our work. Go for it, Jayant.
Hopefully it's okay now.
Go for it, Jayant.
Yeah, great. In terms of learnings I should say contextually, when the fund was launched in 2019, there were hardly any, let's say, comparable initiatives in the market. So going in, we knew that there would be a lot of trial and errors, both in terms of, let's say, I think some points that Saqib made, actually in terms of product market fit, as we call it. Likewise for investors, I think the product that you give should be relevant for the market that you're looking to operate in. So I think initially we had a wide, let's say, framework that we could do mezzanine, we could do term loans, we could do maybe some kind of coupon-based debt. But I think after, let's say, interacting with tens and hundreds of manufacturers, what we realized is that the local context is still tied to debt, unfortunately, on one part. So I think what I mentioned to Saqib earlier in terms of not agreeing, I was actually agreeing in a different way, that you do need a broader spectrum of capital for the market. You don't need just grants, you don't need just term loans or debt. And I think that's what the other panelists from Standard Chartered is also talking about. You need a wider spectrum of capital. Impact investing as a segment, if you look at other sectors, has always given those options to entrepreneurs. If they want to go the equity way, they can do that. If it's PPP, that's available. But I think for the textile and apparel space, we're still quite early. The announcement that we're seeing earlier this year in terms of different banks working with brands, we definitely need that, to support that supply chain transformation. I would say that's one. The second aspect, I think, in terms of, let's say, due diligence that you mentioned, it is, let's say, key. We are well aware that there is a lot of audit fatigue right now in the market. I think every company in our portfolio complains about that. We're well aware. From our perspective, what we're trying to do is, besides, let's say, the basics, we do a financial and legal diligence, which is, let's say, mandated by our own investors. But for the environmental and social elements right now, especially after closing 4 transactions, we're relying more on existing audits already, because we see that there is a lot of overlap in terms of corrective action points or let's say, improvement areas. So we're seeing less and less value to do our own independent assessment unless we see some, let's say, red flags. That's 2. I think lastly, you do need a lot of collaboration and partnerships for this sector. We are just $20 million. It's literally not even a drop in the ocean. But what we can do as an impact fund is essentially, which we also intend to do early next year in Q4, Q1, is come out with our own lessons learned through a publication and a white paper, which we hope would catalyze more private sector capital into the segment right now. And ultimately, we're only operating in 2 countries. If we had the capital and the resources, we'd probably go to every manufacturing location, not just Asia, but also, let's say, Europe. You have other kind of sites there. We definitely look to do something broad scale. I think those 3, I would say, were probably core learnings. In terms of tweaks, we're definitely thinking about, let's say, the product design. Mezzanine is something that we see is some.
Okay. While we get Jayant back, let's talk about scale again, yeah? So there is the Good Fashion Fund, proof of concept completed, specifically sectoral approach, where they folded up their sleeves, went to the actual industry, looked at what's going on. We talk of scale, we talk of local context. You have local context, Khal. You are in many of these economies, yeah? What are the conversations happening with your frontline officers and the industry, and how are you planning to look at capacity building there?
Sure. Thank you. In essence, everywhere we go, in our 68 or so countries, sustainable finance and access to sustainable finance at a cost-effective rate is utmost on people's minds. Now, we are an emerging markets bank. 2 years ago, we published a report called Just in Time. It relates to transitioning to net zero. And it showed that in order for the emerging countries to transition to net zero by 2050, it will require a total investment of $94 trillion, which is probably about $100 trillion by today's, by now. There's agreement that there's two ways to fund it. The governments of these countries can fund it through its normal funding channels, which is basically tax and spend, or it can be funded through international agreements and multilateral approach to solving the climate crisis. If we relied purely internally and indigenously on finance, then the cost of that transition will cripple most of these economies, because it will cost about 5% annually to these relatively small economies, and indeed some of the larger ones, to transition, which means instead of money being spent on other developmental investments, that money will go into just ensuring that what they currently have stays viable. Clearly, that's not a viable option. So then we turn to the international financing solution. And that's where I think it's very, very important that we approach funding, particularly for SME sectors, which really are the driving engine of most economies. I mean, there are very large businesses out there, but the overwhelming majorities of global business, in fact, I even heard it's something like 98 to 99% of businesses are, in fact, SMEs. These are at the cutting edge, at the forefront of interaction with the public, and they're the ones that require significant attention. So governments need to create an environment where they can access finance concessionally. Now, Standard Chartered obviously need to play a role, need to play a role in that. And concessional finance in this regard will be incredibly important, because it will enable businesses to transition where otherwise it would be impossible. Now, who pays? Who pays for these concessions? It has to come from, a variety of sources, but one very important strategy that we're examining currently, and we're very much committed to, is a concept called blended finance. And I'm not sure whether you've come across blended finance or not, but in essence, blended finance is whereby a coalition of funding bodies contribute to any particular project, and by doing so, it significantly lowers the intended risks that apply. And these these blended finance sources can be, of course, can start with commercial institutions, can have sovereign institutions, can have, for example, export credit agencies, development finance organizations such as the World Bank or the Asian Development Bank, indeed even with impact investors, so large philanthropic funds. All these institutions can coalesce to actually provide the funding source to effectively transition, specifically for SMEs. And that's where I think effective policy making, particularly in regards to how do we assess and even account for risk, become really important. I know Helen's just itching to say something there.
Yeah. Helen, you've had the privilege of being in the Blue Zone, contributing in many sessions. People listen to you because you are with ACCA, you have many members, you have accountants, and accountants are crucial for crunching those numbers. What have you heard from there with regards to developments concerning SMEs and this conversation? And what will you be telling them the next time you are in one of those sessions with IFRS and ISO and the big brands?
Sure. Well, in terms of capacity building, I'll just start with what's been happening here. I think that the very fact that ISSB, which is part of the IFRS Foundation, has a capacity building mandate, has given itself a capacity building mandate, is fantastic. For decades, standard setters have set standards and said to the market, you get on with it, and they've recognized the urgency of capacity building in relation to implementation of those standards. So ACCA was a founding capacity building partner. What does that entail? It means that we're working with regulators, policymakers to ensure that those standards are understood and implemented, and then of course the education piece. Joining up, making sure that the other standards relating to audit and assurance, which again are being developed at the moment with IASBA, and the IASBA, sorry, alphabet soup again, but the ethics standards board and ethics are also developing the standards that relate to sustainability. So there is going to be a comprehensive suite there that is going to be able to enable that assurance, which I think is so critical. So you want to ask me a question?
No, I just want to say, and taxonomy is one incredibly important aspect of it all, because a lack of global taxonomy essentially means that there is an ample opportunity for institutions when they're not, in fact, being particularly green.
Yeah.
And if we have a universal standard overseen by institutions like yours, it will go a long way towards delivering a more effective mechanism.
And it has to be approached globally, so that's one. In terms of SMEs particularly, what we're seeing is that certainly in the medium-sized organisations, the finance leader, whether they're called the CFO or the finance director, whatever it might be, they are becoming the focal point for sustainability issues. And so their competence and ability to not just comply, but drive business model change, drive business strategy change, seek the investment necessary to do that is now becoming absolutely critical to their competence set. So in larger organizations, you might have your chief sustainability officer or whatever it might be. That's not going to be there in the SME sector at all. So we're putting a lot of emphasis on the skill sets that exist at that level. It has to be accessible, affordable education, and key to all of that, again, and I'm sure you'll have discussed it in other sessions, is technology investment. Because we firmly believe that the breadth of data, information, and value creation and value assurance is going to require technology solutions, and that the SME sector does not have access to that currently. So how we invest in the technology is going to be important. And my constant plea, and one that seems to be received well, or they might just be pretending with large organisations, is that when they're investing in sustainability capability and technology capability, they have to go into their supply chain. So investing in their supply chain is investing in their own sustainability. And I think that is going to be absolutely key, driving that capability. So I don't think any business now cannot have those two strands threaded throughout sustainability and technology. They go hand in hand. They will deliver the outcomes we're looking for.
All right. It seems like the message that you have conveyed has been clear. We don't have questions, but we'll try a rapid fire. Jayant, can you hear us? Okay. Help me out.
Yes, Rakesh.
Okay. We know the truth or dare, of course. Let's change it. Correct or inaccurate, yeah? Is it accurate or inaccurate? Yes or no? True, false? Whichever answer you want to give. Saqib, I start with you. Financial investors and the ones who want to offer you money, they understand fully what is the need for money, how it will be used, what are the challenges of SMEs. They fully understand it.
A myth.
Okay, thank you. For you, Carl, banks like Standard Chartered and so on, well, they don't have time for 1 and 1.5 million related loans and investments. Yeah, they only talk millions and billions.
Well, we have an acute awareness of the importance of the value chain, which begins somewhere and ends somewhere, and we are part of that.
Okay. Jayant, for impact investing, Well, you don't need to understand the industry and how it works and so on. Yeah, you just need to know, well, some numbers and that's it. Correct or inaccurate?
Inaccurate. I would think that you do need an appreciation in terms of who impact investors are. I think there are different breed of investors. Let's say like banks, and not just the larger banks here, local banks.
Yeah.
So I think the intention is to come in as an investor partner.
Okay.
Rather
Thank
than
you.
as an investor.
Thank you, Jayant. Helen, accountants, they would be wearing sleek suits and jackets and looking at numbers at the table and computers. They don't need to understand the sustainability context and so on. Not required. Is it correct or inaccurate?
Sorry, the question is
The accountants, the formal accountants, they would be wearing, they would be sitting in their offices and wearing these sleek jackets and suits and looking at numbers and crunching what comes in, what goes out. They don't need to understand what's behind those numbers in terms of sustainability.
Incorrect, massively incorrect.
All right, thank you. And now finally, we've had this discussion, you've been at COP, in not statements, but feelings. What are you feeling in your stomach? Are you feeling a little bit of anger? Are you feeling curiosity? Are you feeling anxiety? Are you furious? Are you excited? What is the emotion? Or is it a cocktail of emotions? And if it is, then please share with us so that, because you all look so calm and composed, but what's in that underbelly? We want to know. So, Jayant, you want to go first?
Thanks. I'm a bit nervous, to be honest, considering where global markets and regulatory situation is. I think it's making it difficult for both investors and, let's say, suppliers alike. That's my emotion right now.
Okay. Carl, what are you feeling?
I say that the optimism of the will overcomes the pessimism of the intellect.
Thank you.
Very hard to follow that up. Okay, feeling very warm. The weather and all. But I think overall, very inspiring.
But they have to know what to do about it. And I think your session is focused on that practical aspect. Yeah. I think there's more clarity now about the practical steps that businesses can take than there's ever been.
Okay. Then the final ask for all of you as panelists. My elder daughter said that they have this thing in school about kindness. One person's being kind to 5 and how that goes through the entire school. We have 70,000 people here at this COP session. You have many in the room here. What is your request to the people out here? What should they be talking about, debating about, asking about when they meet the next 5 people over the next few days? What would you request them to talk about? Helen?
I think ask them what action they're taking.
Okay. Saqib?
Yeah, I agree with Helen. Like, be more aware of what they are doing, what their actions are contributing, and then spread the right message, whatever they have learned.
Carl?
If someone asks not what can sustainability do for you, but what can you do to be more sustainable?
Jayant, what would you want to request from the participants? What help do we need from them?